property can be quite a slow-moving, growth formula. And if you pay too much for property, you're going to have to wait and take some time for it to grow past what you've paid. And obviously, if you want to recycle equity, it has to grow quite handsomely.
This is Property Investory, where we talk to successful property investors to find out more about their stories, mindset, and strategies. I'm Taran Shum, and in this episode, we're speaking with passionate property investor Sam Saggers, a managing partner in Positive Real Estate. We'll chat about the influence from friends in high places, whose home was featured on The Bachelor, and how a blunder early in his journey made him realise the true worth of property. With 20 years of experience in the real estate industry, Saggers has two separate roles dividing his time while also an active property investor himself.
My name is Sam Saggers. I'm CEO of Positive Real Estate, which is an investment agency located in Australia and New Zealand. I'm also a managing partner of Richardson & Wrench, which is Australia's oldest real estate agency. I work within the projects division there. Over the last 20 years, I've really specialised in understanding investment real estate and understanding the various different markets around Australia. I've built up a property portfolio over those years of over 20 odd properties and learned a few tips and strategies along the way.
In any given day, he's immersed in property, whether it be researching, strategizing or inspecting.
Most given days I'm analysing real estate, researching property, visiting different cities. I spend a lot of my time simply sharing information, talking to people about property investment, strategies within the marketplace. I do a lot of presentations. So most days I'm either presenting on property or actually visiting real estate and inspecting it.
And you mentioned that you're part of Richardson & Wrench in the property, the project division. So what's that entail?
Yeah, so Richardson & Wrench Projects. Richardson & Wrench is Australia's oldest real estate agency. It's very people from Sydney, for example, would be quite familiar with it. Within the Richardson & Wrench Projects division, I head up and specialise properties which are suitable for investment, but also owner-occupying properties, which are primarily projects in inner urban areas. So, it's just residential, really targeted towards the sort of home buyer market.
Finding passion in his roles within both businesses, Saggers is constantly amazed by the different dimensions of real estate.
Because I obviously lead up Positive Real Estate, which is really a wholesaler within the marketplace. It's an investor-focused business. It's great because I get to work with people who are passionate about the investment or the buying side of real estate. And then as I work in Richardson & Wrench, I get to see another side of real estate, which is, properties that people want to make their own home. I also get to see the selling side of real estate, what sells well in the marketplace, what typically fetches more at auction, for example, because the properties tick a lot of boxes. So I get to, live the property dream with representing both businesses.
Growing up in a wealthier area of Sydney, Saggers' exposure to affluent families was part of the reason why he became involved with property.
So I grew up in Sydney. I grew up in quite an affluent suburb called Hunters Hill here in Sydney. It's sort of 10 kilometres from the city centre. Hunters Hill is a suburb still today full of many millionaires and billionaires. Back when I was growing up there, certainly I was exposed to many wealthy individuals in that suburb. My family, bit of a sort of working class battlers. We actually bought in that suburb, or my parents bought in that suburb in a in a street really no one wanted to buy in. It had a bit of a sort of bad reputation in that neighbourhood, so they picked up something quite cheap, and then just raised me obviously in the neighbourhood. And I guess it was a bit of a gift because I got to be surrounded by families that were extremely wealthy. Today, some of, I guess, the BRW top 200 richest Australians live in Hunters Hill, and many of those families I was exposed to at a young age. In fact, really, my early exposure to their wealth, which was tied up primarily in real estate, was one of the reasons I'm in real estate, and one of the reasons I invest in real estate, because I saw quite early on from many of these wealthy families that dominate that suburb that really, if you want to become quite stable economically in your life, property is such a good vehicle.
This influence remained strong throughout his formative years.
So I went to a couple of schools, but I did go to the local primary school, and at that local sort of primary school, many of the I guess kids from the neighbourhood also were there, and I became very good friends with many of them, which I'm of course friends with today. And by becoming friends with, I guess, just like any kid in any neighbourhood, you got to go over to your friend's house, and then all of a sudden, you unbeknownst to you, their father is, a mogul in real estate, and that happened to me on several occasions in that suburb. So I was pretty blessed for my family to sort of decide to live there.
Some of the families which influenced Saggers at a young age turned out to be owners of two of the most successful companies in Australia, with one of the family's houses actually aired on a popular television program.
For me, probably two families kind of stood out. The first was the Graces, and the Graces were, I guess, the family that started Grace Brothers, which today is called Myers. And the Graces were a beautiful family. They had one of the most interesting properties in that suburb. At that time, it was literally, like a castle. In fact, the property most recently was on The Bachelor, the TV show, as the sort of the place where that show was filmed. But it was such an interesting property to go and visit on a daily basis that, for a start, I fell in love with architecture at an early age from visiting that property, because it was just such an interesting property. And then over and above that, I guess, my friend Sean, the Teague family, they're well-known, I guess, property owners here in Sydney. Their company is called Gwynville, and they would own, several hundred residential, commercial, industrial properties across Australia. They feature in BRW top 200 wealthiest sort of Australian families, and yeah, without question, spending time with them always taught me many, many lessons on real estate.
That is so inspiring, so cool too. So just since you've touched on the topic, that the Grace's house, so is that the actual house you're saying that was filmed on The Bachelor? Is that what you're saying?
Yeah.
Wow.
Yeah. So I think it was the first 3 or 4 seasons of The Bachelor, and then they decided to move it to another house. But yeah, season 1, 2, 3, I think.
Gosh, how did it feel when you actually saw it on TV? You must have got memories.
To be honest, I wasn't watching the program until just one night I randomly sort of walked past it, and at the time I was like, oh, I know that house, and then I actually sort of just texted my friend and asked Sean, actually, is that is that Ted's house?" And he was like, "Yeah, it's on The Bachelor." So
Small world.
yeah, small world.
Yeah, by the way, your house is on TV. Did you know that?
Yeah, I had no idea. But oh no, look, they've long since sold up and moved on. But yeah, it was just how I remembered it. It was an amazing piece of architecture.
Wow. Yeah,
And something
definitely.
really exciting to be exposed to at a very young age.
After completing his schooling, Saggers travelled for a year before beginning his tertiary education in real estate.
After sort of school, I actually went travelling for a bit of a gap year and went and lived overseas. Lived in London, lived in Sweden, lived in Cyprus, and just got some worldly, I guess, experience around travel and people. And from there, came back to Australia, and actually at the time, that particular time, to get into real estate was a 3-year diploma, and you did that primarily at TAFE, sort of 4 days a week, and they've chopped and changed it over the years, from property economics degrees to diplomas and things like that. But in my era, we did a 3-year diploma, and then you could work in the industry while studying real estate. So for me, I essentially sort of started out by learning it through education, and then jumped into getting a job in real estate, and really early on I was in real estate. So from age 19 I jumped into real estate.
Although starting his career in real estate in property management and sales, he found his niche when he began investing into property.
I started just in property management for a couple of years, and worked in North Ryde, and just did the sort of ground up kind of approach, and from there got into some early residential sales, and then really, I guess my fascination with real estate didn't take off until I started to invest in real estate. I guess I wasn't a fantastic salesperson or a fantastic property manager, so I never, I guess, liked that side of real estate where today I guess many real estate agents really don't even own real estate. They pride themselves on being great salespeople. For me, I was a sort of mediocre kind of salesperson and mediocre property manager, but I liked the industry, and really, I guess I found my home when I started buying real estate and started to become a buyer's agent, and that's really, I guess, it took a little bit of time to get to that place, but that's where my passion lies.
That's really good. So sort of putting things into perspective, roughly what year was this, going back when you first started getting into buying property and also investing into property?
It would have been like close to, I guess, the year 2000, maybe 1999, and I bought sort of my first property in Sydney, actually, and I sort of chose a property which wasn't the best. It was an area I knew quite well, and I started out with that property, and I guess I've gone on to bigger and better things since then.
In 2000, the first property Saggers invested in was bought emotionally in a familiar area. Upon failing to yield to his satisfaction, he eventually sold it and started afresh.
I just bought a property in Sydney in a suburb, Putney, and it was close to where I lived, close to where I worked. It was, I guess, at the time, I probably paid too much for the property. I was a little bit emotional about it. There's a few other people quite interested in it, and as you do when you're young, you're kind of full of energy, but not necessarily that street smart when it comes to economics. And I guess I jumped the gun and paid a little bit too much for the property. Property can be quite a slow-moving, growth formula, and if you pay too much for property, you're going to have to wait and take some time for it to grow past what you've paid. And obviously, if you want to recycle equity, it has to grow quite handsomely. So my first property, I only held it for about 18 months, and then I decided to sell it because it was old, secondhand. It was full of repairs and maintenance problems. It was really not a great yielding property, and I ended up sort of selling it and sort of starting again. But it taught me a great lesson, that you need to understand how much a property truly costs to own you week in, week out. You need to know your tax foundation to understand, what your true costs are, and really need to just understand what extra costs are involved in holding real estate, particularly if it's old and a bit run down. So for me, the actual daily cost of running that property, plus the fact that I overpaid for the property, I couldn't see, a winning economic outcome for many years to come. So I decided just to sell it, and I could save faster than I could having a property which was, going backwards.
Having accumulated 20 properties in his portfolio, it's not always been a smooth road to success. Saggers has learned over the years to ensure that owning properties doesn't impact on his lifestyle.
Oh, look, I think I've been quite fortunate. I mean, probably my low was the previous story I just sort of mentioned, where I overpaid for property and bought a property which was, really sucking the cash out of me. I think it's prudent today. I mean, a lot of people in Sydney, for example, where property prices are expensive, where incomes aren't necessarily growing right now, a lot of those properties cost $500 a week just from your wage to hold. So you have to be very, very careful that you're, choosing a property which is primarily paid for through the tenant and or tax. And once you're spending, I think more than $50 or $100 a week out of your own back pocket, it gets very difficult to own real estate and feel good about it. So for me, really the pain lesson was to the cash flow side of real estate. When you have really good rents and really good deductions from property, really you shouldn't need to put too much out of your own, wage or job or lifestyle. The big lesson for me was the first property I chose actually impacted my lifestyle, which made me quite unhappy. And I sort of vowed to never make that kind of mistake again. And fortunately, most of the properties I've chosen have all been able to wash their own face, pay for themselves. So even if they haven't grown exponentially, or even if I haven't been able to recycle money out of them quickly, they've never bothered me because the rents and the tax incentives have always looked after the asset.
His aha moment where everything clicked for him was when he realized the potential of property where it's directed and made for owner-occupiers as an end result.
I feel like I'm continually learning and understanding the real estate market, and without question, I kind of have those moments all the time. But probably most recently, I guess for me, understanding the real estate market of today. There's lots of supply of real estate out there. There's a lot of production. Australia's got a big plan to certainly grow its population. We need a new property every 3 minutes and 55 seconds to keep up with the population production that Australia's overall goal is. Our big cities are being activated with people. And so for me, probably the biggest lesson is And really, I think it's a shrewd lesson is, there's a lot of homogenous real estate out in the real estate market, and many properties are just designed poorly. They're produced en masse. And I'm not talking about just big buildings. Some big buildings are produced and are very unique, very architecturally savvy, very beautiful. And some buildings are just not. And the same with houses. Some houses really appeal to the owner-occupier marketplace, and then other houses, people will never buy them as an owner-occupier, and they'll sit in a sort of rental pool for life. And I guess my big moment, or most recent aha moment, is, you really got to focus on properties that people aspire to one day call their home. Because if you buy an investment that one day becomes someone's own home, and they look at it because it is unique and beautiful and good, they'll pay you top dollar for that property, and you'll get very good capital growth along the way. The moment you forget there is or needs to be an end user over and above you, the investor who's just getting a rental return, real estate can be quite cruel if an owner-occupier doesn't want the property from you. So I think the big moment for me is really investments today, in particular in this sort of saturated marketplace that we're seeing. They need to stand out from the crowd, and they need to be in really good locations, and be, sought after by people who one day want to live in them and call them their home. And if you, I think, stick to those three basics: a good property, a good location, and a property which is going to meet the market, then you're going to do well out of real estate.
In the belief that choosing the right property is vital, Saggers says that property needs to be liquid.
There's a lot of investment grade real estate out there, and they're in subpar locations. I mean, you can do whatever you want to real estate. You can rent it out. You can, develop it, subdivide it, renovate it, but you can never change a property's location, and you're stuck with it. So I think, buying in the right street, in the right neighbourhood, in the right suburb or town, and then focusing in on, well, what is the right dwelling for that area? And that could be in a big building, or it could be in a small building, or it could be in an individual, detached home. But it's got to be the right dwelling. And as soon as you choose the wrong property, your capital growth is less, your ability to recycle equity is harder, even if the market grows. And of course, you are exposed to a tough resale market. Real estate needs to be liquid. If you've bought the right property, you should be able to sell it within 30 to 60 days. If you bought the wrong property, it can take months, even years, to offload the wrong property. And that's just because it doesn't match what truly the local market is looking for.
Rather than something holding Saggers back when initially purchasing an investment property, he feels he didn't take the time to ensure it was a good investment.
I was just in a hurry to get going, and full of energy, and sometimes that kind of behaviour can come back to bite you. So for me, I always knew that real estate was a way of, I guess, becoming, more economically free. And I'd learnt that through growing up in the area I was fortunate enough to live in. People I was surrounded by, my friends had bought real estate. I just simply chose the wrong property. It wasn't, necessarily desirable. It's probably an investment grade piece of real estate. And I guess I got into the market and I soon realised, I should have slowed down, maybe not gone to that auction that day and actually taken a little bit more time to think through how real estate economically works. But it was a good lesson. We all pay for education in one way, shape or form. And for me, really, if that didn't happen to me, then potentially I wouldn't, be the person I am today. So I learned a lot.
An avid fan of education, he's always learning from other market experts who are great at what they do.
I've been involved with, over the years, great educators and great property people. And I think property is a very disruptive industry. There's a lot of change constantly. And, I'm constantly learning from great people. Today, I would say, some of my mentors include Tim Forrester from ARIA. He's been awarded Australia's best urban developer from the UDIA. He's fantastic to learn from when it comes to design principles and urban living. I'm always learning from other industry people who are always, great at explaining where the market's at, whether it be Tim Lawless from CoreLogic, who's brilliant at sort of helping understand what market conditions are like, to your sort of Mark McCrindles, who are a great demographer, really explains how the change in human behaviour will affect real estate of tomorrow. Beyond that, I'm always learning and surrounding myself with a team of people who are good at what they do, because I don't profess to be great at everything. I think it's important that, in real estate, you have a great team, whether that's a good lawyer, a great real estate agent, a great property manager. Everyone has something to offer. And I think, there's a lot of people, if you put a team around you, you get great mentorship from areas you would sometimes not even think you need training in. And for me, that's very much the case.
The best advice he's ever received through his experience with industry professionals such as these is to ensure that you buy well enough, so if you are forced to sell, that you will be readily possible.
Probably the best advice is, I think, look at very liquid real estate, and real estate that's in really great areas, desirable. Because in life, you never know when, you get thrown a curveball, so to speak. And you want to be able to look at real estate today that if you wanted to sell, there's a lot of buyers out there who would take the property off you. And so for me, probably one thing that I'm always conscious of today and is follow marketplaces, suburbs and property, which you buy well, but you can always sell well. And I think it's so important to be in those areas.
Saggers has penned several books, his most recent one focusing on up-to-date strategies which the average Australian property investor can consult to gain a more relevant picture of what's happening in the market today.
I've actually written 4 books, but this book, which I've just sort of put out, The Future of Property Investment in Australia, I think is certainly probably my best book, and without question really relates to the property market of today. I think there's a lot of sort of strategies which get talked about which are from a bygone era in real estate in Australia, from 10 years ago. Go and find a positive cash flow property in a mining town. Obviously, that was very 2001. So we need to educate people on really what Australia's goals are, what Australia's business plan is, and link it to the production of property. what that means for the average person just trying to build a great sort of buy and hold property plan, and how they can make, I guess, a few bob along the way. So for me, I was compelled to write the book mainly out of frustration that most people seem to talk about property, about strategies which I think are a little bit, past their use by date.
In his book, he explains the key principles which allow you to succeed in property investing on the particular property you choose, the area and the market.
Yeah, look, I think for a start, for me, there's four key principles to making money out of real estate, and the first one is the right property. So what is the right property? And the book sort of goes into detail about, for an investor who potentially only wants to spend, $300,000, $400,000, maybe $500,000, what actually property or dwelling makes a really good investment, and the types of inclusions, fixtures, fittings, floor plans, orientations people should be looking for when it comes to choosing the right dwelling. Then secondly, the right area. It's so important to choose the right property in the right area. And so what is a good area? What areas will grow faster than others? And in my book, I talk about, the big 5 areas which people should look for in our major cities. What places actually stand out from the crowd and potentially will get better capital growth because those type of areas are in more demand. They're very much demand-led areas. And then, thirdly, just talking about, I guess, the market in general, what makes up a market, what drivers are in the marketplace. And then fourthly, understanding that if you've done the first 3 steps really well, you should be in or capable of getting extra growth from your property through being able to one day sell it at auction and get a lot of demand coming along and outbidding each other to own your property.
He considers his book, The Future of Property Investing in Australia, a buy and hold based approach, going into detail about how to best go about in the modern market.
For me, I wanted to sort of explain to people where they should buy, what they should buy, how they should go and do it, and then just link it to sort of other strategies which are in the market, whether that's taking your property today and putting it, for example, on Airbnb and getting or maximising your rental return through short stay techniques, or whether that's simply buying a property in a better suburb which is going to yield better in the long term and showing people debt reduction strategies. So, for me, the book is still a buy and hold strategy book. I think, most people that will be successful in real estate are in it for the long term rather than sort of hoping for speculative growth and then, some sort of get rich quick strategy. So for me, the book touches on a few different ideas on how to be a successful property investor, whether that's sort of strata tiling or subdividing property, or whether that's simply buying a good buy and hold property that you need to hold for 10, 15, 20 years, but where are you going to do it? And potentially, if you choose the right area, perhaps your property won't take 15 years to double, but maybe only 9 years to double. And if it takes 9 years to double and saves you 6, well, that may mean you don't have to work 6 years longer than you need to. So the book goes into a lot of detail about that.
With an experience of over 20 years in property investing, Saggers has built a substantial diversified portfolio.
Yeah, well, look, I own shares, I own businesses, and I own property, and their collective value is certainly around that kind of money. And from a real estate point of view, I would have over sort of 15 million in real estate assets. a lot in businesses and other things.
This portfolio is living proof that an effective buy and hold strategy is paramount to creating wealth as an investor.
So I think the main thing to create a good long-term buy and hold strategy is, without question, you've got to have a fairly good rental return that allows you to cover the debt you take on. If you know how to buy well, if you know how to sort of make some money in the short term, perhaps get a discount on a property, choose a property that can easily be renovated to create equity, choose a property which you can add some value to, then what happens is it means you are able to equity release some money from the new value created, and that allows you to sort of domino effect and buy another property. Here in Australia, it's interesting statistics. Out of all the property investors in Australia, there's only about 15,000 property investors today that have more than 6 properties. So most people don't end up building a property portfolio, paying little to no tax. Most people end up with maybe one property investment plus their own home, or 2. I mean, you can look at the statistics through the ATO. So I think it's really important that if people want to, I guess, become economically free in their life, they don't really need to do too many more strategies than a simple buy and hold, because most people can't do it. And the people that do it actually become really quite independently wealthy. For me, building a great buy and hold portfolio has worked out tremendously well. I've watched all of my assets grow each day. Just based on inflation, my property portfolio literally rises by about $1,500 a day. So you're seeing just the buy and hold strategy at work. It's great.
His fundamental buy and hold strategy aside, Saggers has also attempted some development and subdivisions. However, only advocates people to do this if they have more experience with investing.
I've done development and strata, subdivision of big apartment complexes and so forth. And I guess, if I was being honest with myself, I would say that I wasn't that successful at that. There's a lot more money to be borrowed, a lot higher interest rates. Some of the developments I did, I borrowed money at 17% interest. And for the average person, that's probably not a place where you want to go if you don't have that much experience. I think today in Australia, there are some very shrewd, professional, world-class developers. And for the average person to go up against them, they need to know a hell of a lot about real estate today. So for me, I've made some money out of doing some strata subdivisions, buying an old block of flats and converting the titles from one title to multiple on through strata subdivision. And that's probably been a lower risk version of development, which has been successful for me. Recently, I just did one in Newcastle. It was just a duplex. It was nice, easy. I built the duplex and then strata subdivided it and pulled some equity out. So I like those type of strategies. They're a little bit more capital intensive. You need a lot more equity to borrow money off the bank. Typically, the bank's lending 70 or 80%. Whereas a buy and hold strategy, you still can, borrow 80 to 90%. So, I think I always say to people, if you get to the 1% club, which is essentially those 15,000 people that have 5 or more properties, talk to me about doing something a little bit more tricky, and we'll get in there and do it. So, but I'm not an advocate of people owning 2 properties and then becoming a developer. I think it's crazy.
Living through many market cycles, Saggers' portfolio will keep growing.
The reality is my portfolio of $15 million still has 2 to 3 more property cycles in it before I retire. So one would assume the value of those properties in another 30 years will, be worth a lot more than what they're worth today. So you're taking that $15 million worth of hold, which doesn't really cost me much out of my own wage or income because the rents and the tax pay for it. Come 30 years from now, when I'm looking to, not work, and really 15 to 30 years from now, that $15 million, that could, of market exposure, could dividend $30 to $45 million in results, and that's just a buy and hold strategy. So there's nothing tricky about it. Anyone can do it.
Other than the minority of Australians who are hardcore property investors, why is it that people don't naturally follow this strategy if it yields such amazing results?
Well, I think for a start, real estate is a little bit confusing. People are certainly, I guess, fascinated with, only buying in their own backyard, and that has its own limitations. I think today people are getting a little bit, more used to sort of owning a property in Melbourne when they live in Sydney, or, owning a property in Perth when they live in Brisbane, that kind of thing. But without question, I think most people see, owning too much property as too risky. And I would argue that if you've got a good rental return and you're smart about what you do, owning 5 properties is a sensible way to actually retire from your job quicker and certainly get out of the rat race. But I think there's a lot of people don't know how to structure to get to that point. They don't know how equity works. And really, even in my book, I give some good lessons just on what is equity and how can you use it to actually join the 1% of people, or 15,000 people in Australia, 1% of investors that are actually successful buy and hold people. So, yeah, I guess it's an interesting context out there. There's over 1 million people with investment properties who have only one investment property. There's only 15,000 with 5 or more. So it's interesting. I'm a big advocate on getting to that small group of people that end up in that place, because you've got a good portfolio. It's usually diverse in a few areas. When one market isn't performing, usually one of your properties is growing because you're diverse. You've got a property in Melbourne, it might be growing, but your property in Sydney might be stagnant. So having some diversity in your portfolio is so good for continuation of wealth. And yeah, it's worked for me. So it's certainly something I teach other people to just knuckle down and get into it.
A personal habit which Saggers attributes to his success is constantly learning.
I'm always a believer in learning, and I probably one of those people that doesn't spend a lot of time, when I get home, sort of watching television and just tuning out. I like to participate and I like to learn things. So for me, I feel like we live in a time in whether it be related to property or not, but the time we live in at the moment is very disruptive, and we live in a time where literally, jobs are being outsourced overseas, technology is improving and replacing people for the most part in broad economics. So I guess for me, I just constantly got to learn, and I've just constantly got to learn because of the need to be relevant. And I will teach myself things. I will learn from others. You name it. I'm constantly out and about, sort of understanding how things click out there. So I think for most people, if they're interested, doing an education course is smart on property, but it's also could be just upgrading your own skills in whatever business industry you work in. You could be in advertising. Well, learn more about it, become the best of what you do, because we live in a society where things are changing quite quickly. There's a lot of disruption.
Some podcasts and books that he recognizes as part of his learning journey include those by Andre Agassi and Tony Robbins.
I mean, I'm always having a sticky beak out there. I'm just reading, and probably a bit late to the party, Andre Agassi's book, Open, and there's gifts and stories in that book that you can apply to being successful. So, there's a bucket load of them, which Napoleon Hill stuff is good. It depends what you're looking to do, but I think if you maybe wanted to get started somewhere, you would start on a little bit of. I always find that people need to just get their psychology right if they're going to become property investors. Just get their sort of headspace right, and some of, for example, the Tony Robbins books and things like that, they're pretty good to sort of download, and podcasts and things like that, just to make sure you're feeling right about what you're trying to achieve. Because what I find with property is actually quite reliable. Like if you just leave property alone, let it do its thing, come back in 15, 20 years, the odds are your property is going to be worth more than what you paid for it. The odds are the rents are going to be higher than what they were when you first bought it.
However, while property is reliable and numbers driven, the investors who hold the property are more emotional. This can be an issue when we as human beings don't condition our mindset.
So property is reliable. What I find is, people are not reliable. People are, for the most part, quite emotional creatures. And for me, probably the downside of the property industry is the people or customers, or what should I say, buyers in the market, people who own real estate. They go through a whole hurdy-gurdy of problems in their life. They get divorces, people die in their life, they run into economic challenges. So what happens is, if you're going to be a good property investor, you need to actually be quite confident in yourself, because, as I say, property is reliable. People tend to be quite unreliable. Their emotional state constantly changes. And if they don't understand who they are as a human, they quite often have a disconnect with owning or taking on the risk of being a property investor. So I'd probably recommend, listening to podcasts on self-development. There's plenty of good people out there that specialize in understanding how to create goals and just getting your mindset right. Because if you can, be quite reliable to yourself, you can really go places.
If Saggers were to meet his past self from 10 years ago, what advice would he give him?
I'd just say keep going. You're on the right track. You don't listen to the noise. Just keep going. And I mean that we live in a time where, the real estate industry was never meant to be like the stock market. Owning real estate was, you bought it, you hunkered down, you hold on to it, you learn to pay down debt, and you come back 10, 20 years later and you've got a beautiful asset that's worth more. But today we live in such a time where there's daily media grabs. It's almost like the real estate market has become the stock exchange. There's news on, real estate, down this month. And that fear plays a lot on people's minds today. Once upon a time, the real estate market, yes, it was spoken about, but that information was delivered perhaps through the newspaper, it wasn't constant in a digital world. And for me, if I met myself 10 years ago, I'd be saying, keep going. And I think if people are sort of starting out on that journey today, they're probably hearing a lot more noise than I ever had to hear 10 years ago. So maybe they should say to themselves, just keep going, just plow through it, because the media loves doom, and their doom and gloom. Don't let it sort of, get in your way of getting to the goals you want in your life.
One of the most exciting aspects that Saggers is looking forward to within the next 5 years is utilising his properties for recreational purposes, such as living around Australia and creating a lifestyle he's always wanted.
Oh, look, in the next 5 years for me, in my property journey, I think I'm evolving my portfolio. I'm choosing suburbs where I guess I've gone through my sort of foundational purchasing of real estate. I've made money from, properties over the many decades I've owned real estate. And really, I guess for me now, I'm going into a different phase of being an investor, where I'm debt reducing to then own assets outright. And the assets which I will own outright, once I sell down some of my portfolio, will actually be in very fun places. And for me, it's been very important to build a portfolio where I can own real estate in suburbs which I can use later in life. When I'm independently wealthy, I've got assets in places which are fun, which if I go to Melbourne, I'm going to my Collingwood place, which I'll use, and then I'll go to the tennis, or I'll go to the Australia Day boxing test. And when I'm not using it, I'll be putting it on Airbnb and renting it out short term. So for me, I'm going through a personal transformation over the next sort of 5 to 7 years of really keeping the assets, which I know are fun, dynamic, in fun and dynamic neighbourhoods. Because one thing which is exciting for me is some of the assets I've bought are in suburbs which are great for lifestyle later in life. And they're not just investment properties in Timbuktu, which I can't get a personal use out of. And for me, I've been able to shape 5 of my properties, which are actually usable properties in the shared economy, which, you can use things like Airbnb today. So it allows me to be a bit of a global citizen, which I'm excited about, because I'm the type of person that doesn't like to stay in one spot, and allows me to really live in Sydney and Melbourne and Brisbane and Cairns and Newcastle, where I've positioned these properties quite nicely.
If you want to connect with Saggers and find out more about his strategy and what you can do via his services, you can reach him through Positive Real Estate website.
Of course, you can sort of get my book online. You can get it at any good bookstore, Dymocks, things like that. Just Amazon, jump online and grab a copy. If you want a complimentary copy, come along to Positive Real Estate's property information nights. They're held all over Australia. Just jump on our website, positiverealestate.com.au. Come along to one of our property workshops. I'm at plenty of them, so we might even bump into each other. And just ask for a complimentary copy of the book there if you like. They're free for people who attend our workshops. If you're unable to attend, just maybe grab a copy online and try and catch up with us soon. But yeah, we'd love to have you along to one of our workshops, and really that's a starting point to understanding, what you're trying to achieve, because My story might be a little bit different to other people's, story, where their goals are headed. And I think that's the best place to start is come along to that workshop and start to plan and map out your goals from there.
Thank you to Sam Saggers, our guest on this episode of Property Investory. If you want to hear more about his journey, then visit our website at propertyinvestory.com.